Germany's car manufacturing giant Volkswagen is one of the world's most popular automotive brands, but it now finds itself in crisis. The company says its operating profit fell by a staggering 44% last year, and that led to the decision to cut a total of 50,000 jobs by the year 2030. Now, the various brands under the VW Group sold around 9 million vehicles worldwide, but that wasn't enough to cope with the headwinds. In fact, this was the Volkswagen Group's worst result in nearly a decade. The VW Group includes 10 brands, among them Audi, Bentley, Cupra, Ducati, Lamborghini, Porsche, Seat, Skoda, and Volkswagen's commercial vehicles division. Overall, the Volkswagen Group's operating profit dropped to 6.9 billion euros. A vast chunk of this dip was linked to its longest-standing partner, Porsche, with that luxury brand's net profits all but wiped out. Now, the company logged a net profit of just 90 million euros compared to 5.3 billion in 2024. From intense competition in China to punishing tariffs in the US, as well as the need to invest in electric vehicles, the Volkswagen Group is reeling. Here's a bit of what the group's CEO, Oliver Blume, told reporters on Monday.
We have a lot of work to do. Global conditions are changing completely. Things that were once dependable are no longer. Our business model of the past decades no longer works.
Now, the job cuts pose a serious concern for employees, especially those at the group's home in the German city of Wolfsburg.
You just worry that this will continue after 2030, and I still have to work for a bit until then.
We're in tough times, and not just at VW, but everywhere.
Let's turn to Steve Greenfield, an automotive technology investor, industry commentator, and general partner with the company Automotive Ventures, a venture capital fund. He joins us from South Florida in the US. Good to have you with us, Steve. Now, how did Volkswagen get things wrong?
Well, as you saw today, the executives announced that the Volkswagen Group as a whole suffered from a 44% reduction in net profits from 2025, announcing subsequent to that they're going to cut 50,000 jobs across Germany by 2030. Really, there are four things going on that are really squeezing Volkswagen right now, as they're squeezing many of the other automakers in Germany. One is the 25% U.S. import tariffs, which is really challenging them economically. Number two is intense competition from China. That's both within China, sales diminishing, but also the Chinese entering the European market and taking more and more market share with each passing year. Number three would be the high restructuring costs from the shift to electric vehicles. It's been hard for these legacy automakers to really understand how quickly or not consumers were going to adopt electric vehicles. And number four, last but not least, is the challenge with a software-defined vehicle. As we've seen with Volkswagen specifically across their CARIAD division, they've made billions of dollars of investment. They hired and then laid off thousands of software developers. And more recently, kind of throwing their hands up, they made this multi-billion-dollar investment in Rivian and have announced subsequent to that Rivian is going to be their platform going forward for their EV infrastructure. So there's a lot going on right now in the automotive world, a lot of change, but all of these things are squeezing legacy automakers like Volkswagen.
Lots of internal, lots of external factors. And we're seeing, for example, they actually had figures go up in the Middle East last year, but with the current war, could that mean even lower sales this year?
Yeah, I think there'll be a challenge twofold. One, in any of those countries in the Middle East, at least in the short term, will have diminished sales. But, if gas prices, oil prices and gas prices at the pump continue to go up, ironically enough, we may see consumers choose more electric vehicles right at the moment where automakers like Volkswagen are now starting to deprioritize the building of EVs.
Yeah, they did bet so heavily on EVs, but they appear to have nothing on the Chinese brand. So in that regard, where did the German and European car makers and also policy makers miss on this?
Well, I don't know if it's a miss as much as just sort of a miscalculation of how quickly consumers would adopt. I mean, China has a lot of top-down stimulus really to stimulate not only the production of, but also the consumer demand for EVs overall. And they're having a bit of a reset right now. But China has very deliberately over the last decade or so dominated the supply chain for EVs overall, which puts, Western automakers in a precarious position where they're reliant upon, the Chinese effectively for battery technologies and the entire battery supply chain. So, folks like me believe that long-term EVs will be the dominant drivetrain on the face of the earth, but we are going to continue to face short-term challenges between now and then, with consumers really balking at whether or not they want to, replace their ICE vehicle or their hybrid vehicle with a full-on battery electric vehicle.
Volkswagen does have a bit of a good reputation when it comes to sort of quality assessment and things like that. I'm just wondering whether that will come in handy in the long run, as you're mentioning.
Yeah, it will. And if you saw back in November, just a few months ago, Volkswagen announced a pretty significant investment in China to build, their EV platform going forward out of China. So interestingly enough, I mean, they are obviously open-minded to partnerships. We spoke about the software partnership with Rivian in the US. They're going to build the new EV platform in China. And subsequent to that, they've announced that they're going to have 30 new EVs built on this new Chinese platform within China, and potentially even start exporting EVs that were built and designed in China to external countries. Right. So it would be ironic if, the Europeans start to receive, within a year or so, Chinese-built Volkswagen-branded EVs onto European soil.
Right. We'll come to the sort of way forward in a bit, but just still on this mess at the moment. Operating profit at Porsche, one of the companies under the VW group, collapsed from about 5 billion in 2024 to just 90 million in a year. What happened? Did they make the wrong bet on EVs in that case?
No, I think part of that is that the Porsche brand is being squeezed in China. It's been a very profitable brand, but if you look at the year-over-year decline in volume in China, some of that is being driven by sort of a more nationalistic Chinese consumer who now has options to buy Chinese brands instead of Porsche. I think across a lot of the German manufacturers now, they're really retrenching from pretty dramatic decreases in sales within China, which was historically a very profitable market for them. But Porsche, like the others, have had a hard time judging how quickly to move to EV drivetrains. Even this week, we saw the Porsche 911 Turbo, which has historically been a normally gas-powered vehicle. Now they're playing with hybrid power plants, and some of the industry experts out there are saying that Porsche should not be, for these purist 911 vehicles, be playing with electric drivetrains at all. And I think that they are potentially going to endanger some of the historical fans of Porsche as they try to figure out the right timing to migrate over to either hybrid or full-on electric power plants.
Right. Meanwhile, media reports are saying total bonus payments to the Porsche management board was around 13 million euros, now compared to 90 or so million profit. That's not a good look, is it?
It's not, but I mean, historically, as the company made 10x the profit in the past, those numbers probably haven't diminished much in terms of the bonus payments. But in perspective, in the past, they probably were reasonable. But yes, as you pointed out, when profits are down more dramatically, I'm sure shareholders will be a little bit more suspicious.
Right, and on this whole issue, it's not a disaster just for Volkswagen, but for Germany, in terms of the numbers of jobs affected, could we also see potentially a ripple effect with other similar companies or even other industries in the country?
Well, even worse than that is really the supply chain, the tier 1 suppliers and the tier 2 suppliers. You can imagine that when automakers like Volkswagen have their market share shrink and their profits get squeezed, they're going to be looking to the suppliers to also share in some of that pain. Suppliers typically operate on razor-thin margins, much thinner margins, profit margins than the automakers themselves. So I expect that you're also going to see a cascading here where you'll see, German suppliers also get squeezed and whipsawed around here.
What about the role of the U.S. tariffs on this?
Well, it surely doesn't help. I mean, the U.S. here, where I'm living, is going through sort of a challenge from the Supreme Court. So we'll see where tariffs end up. For the time being, automotive tariffs have not changed because of the Supreme Court ruling 2 weeks ago. But at the same time, it's not helping also dampening potential demand out of the most profitable market in the world for Volkswagen, which will be the U.S. market overall.
So how can Volkswagen turn this around and remain competitive, especially in this era of, as we've mentioned, Chinese dominance in EVs, but also, with trade tensions?
Yeah, there's really two things that an automaker like Volkswagen needs to do to compete with the Chinese. Is one, shorten the innovation cycles. The Chinese can, from concept vehicle to getting that vehicle into the showroom to sell to consumers, they can do that in a dramatically shorter fashion than Volkswagen can. And at the same time, which is almost impossible to do at the same time, is also reduce costs. And they're going to have to learn from the Chinese how the Chinese over the last 20 years have effectively re-engineered the way that they build cars to design them faster and build them cheaper. And the German manufacturers are going to have to figure out what the Chinese are doing. We've seen evidence of that, as I said, with Volkswagen now deciding to make a significant investment in China to build their future EV platforms. But they're going to take a page from the Chinese and try to learn how to build faster and cheaper. Otherwise, I mean, this is an existential crisis for the legacy automakers like Volkswagen.
Okay. Steve Greenfield with Automotive Ventures. It's been great speaking to you. Thank you for your time and your insights.
Thanks for having me.
A big thanks to Steve Greenfield for fielding my questions. But what we would like even more is for you to send us yours. What do you think? Can Volkswagen rebound from this crisis? Let us know in the comments. And if you like this video, please hit that like button. And if you haven't already, don't forget to subscribe.